Alrighty, good morning. Thank you for coming. We're a couple minutes early, but we might have a lot of ground to cover today. What I'm talking about today is, its title is Exploration Due Diligence. And what I want to do is this is what we're going over today. Real quickly, the big picture, which I think for this crowd comes down to the US dollar versus the gold, where I think that's going. Medium picture, which is we're going to look at actually mine supply and demand. And then real life examples. Someone suggested I should retitle that to How Many People Can I Piss Off in 20 Minutes? So that's where we're going today. All right, big picture. Precious metals versus the US dollar. For a lot of reasons, I'm sure you've all, this has been talked about a lot of this show and on Kitco and such. There's a high probability the US dollar is beginning to roll over in tandem with the global markets and this bull market that's been going on for 10 years. And this little chart here sort of shows where I think we are in this picture in terms of the major markets and where they're going. That is going to affect not just the global economy, but again, the US dollar. And this is an interesting slide that shows the percentage of stocks with negative free cash flow in the various exchanges around the world. And I find it amazing that Canada, 82% of the stocks, the companies, show negative cash flow. And that's probably because a lot of the companies out here. But even the United States, 58% of the companies listed are negative cash flowing. That's not a good sign going into a rolling over market and a slowing economy. All right. The US dollar is sort of the safe haven, or has historically been. What I'm seeing happening now is this guy is alienating most of our, or not all of our allies. The Mueller investigation, however that comes out, if there's problems, it's difficult to see how he's going to react and what's going to happen, but I can guarantee it won't be positive, again, for the US dollar. So this is another reason I see confidence in the US dollar waning and gold as an alternative that's going to come to more and more prominence. All right, more important, looking further out, metal demand is not going away. The world's demand for copper doubles every 20 to 30 years, and here's a chart showing where we are and how it's gone over the past, since what, 1900 it looks like? Anyway, it's obvious to y'all. As we improve our lives around the world, demand for the metals that make that possible increases. And this is probably, in my view, one of the most important slides or concepts to get into your head, is that the number of discoveries is declining, regardless of how much money we spend. And there's a lot of reasons for that we can go into, but bottom line, discoveries are declining. Production is needing to ramp up to meet demand, and it's just not happening. And then you look at the timeline from discovery, once one is made, to production, that's expanding too because of the complexity of the deposits that we're finding nowadays. Most of them are undercover. Then you've got the social, political issues to deal with as well as environmental. What this shows is the cumulative number of discoveries that becomes mined over certain periods of time. What you can see, about 72% of the discoveries have been turned into mines since, 1950s. But most recently, from about 2000 to 2016, only 18% of those discoveries have turned into mines. Now, some of those, as we go down, in the future, will come into it. But the point being, most of the things we find are not going to become deposits for multiple of reasons. And the problem is, on average, only 1 in 1,000 prospects actually turn into a deposit. Between 2005 and 17, there was $65 billion spent in gold exploration globally, and about $30 billion in value was found. So this is a money-losing enterprise to start with. And I like to think of it this way: for every 2.5 gram deposit, the Earth formed maybe 10 1-gram deposits. Now, 1 gram deposit at surface might work, but since we're not finding these deposits at the surface anymore, we're having to look deep undercover. We're taking more esoteric methods to find those things, and we're still going to find 10 1-gram deposits for every 2.5 gram deposit, but those 1 gram deposits are not going to be economic. Yet you don't know it's 1 gram until you spend enough money to determine what it really is. So that's an issue we've got to deal with as well. So the drilling costs are higher. Metallurgical issues, usually when you're going deeper, the metallurgy is somewhat, if not a lot more complex. The strip ratio is really high on open pits. Waste, you've got to move the waste around. That's the much bigger disturbance area. Water issues, either there's too much or not enough. More complex permitting for these large deposits, plus the regulatory environment has gotten more difficult. And on general, your CapEx is going to be a lot higher on discoveries we're finding now versus ones we found 40 years ago. So really, one of the questions that you need to answer when looking at early stage projects is how much is it really going to take to disprove a discovery? You need to know, and I think this is where we get to the next slide. So your job is to recognize success and failure and do that as efficiently and quickly as possible. Given we know the odds are so low, our job at Exploration Insights, at least, and I think this should be yours as well, is to kill a project as quickly as possible and move on to the next one. To do that, you need to know the geologic parameters. What sort of deposit are you looking for? What does it really look like in terms of tons and grade? What's the likely metallurgical process? If it's a oxide heap leach, your CapEx and OpEx is going to be a lot lower than a sulfide or arsenical deposit. So you need to take that into mind when you're evaluating these things. What is the funding requirements? How much is it really going to cost to either prove or disprove you've got something? And how is that company out there going to raise the money to do that, hopefully at continually higher prices? What's the go, no-go decision points? When do you know that this is not working or that it is working? I mean, a real simple test is and this is obvious, but you got to keep this in mind, is if the results keep getting better, it's going well. If they don't keep getting better, it's not going well. And that's the point you got to go, I'm out of here. Don't hang on hoping. What's the social and environmental limits? I remember a project I looked at in Colombia that looked on paper quite well. But you go there, and here's where their project is, and just up the hill is a beautiful white church, And I've been to another where on paper a nice trench results, but you go there and this trench is the bottom of a deep canyon in Mexico. It'll never be a mine. Is it meaningful as well? If you're going to be, in my view, if you're going to be investing in this sector, speculating in this sector, you want to be in it for the big discovery, the one that's really going to take your share from 10 cents to $1, $10, something that's meaningful because the risk is so high. Too many companies, in my view, are out there looking for something that, even if they're successful, it doesn't really impact the share price. It doesn't matter. And again, does that translate into share price? Ideally, what I'm looking for is a discovery that a mining company is going to come in and buy, and my little junior company does not have to do the feasibility on, doesn't have to build it, that sort of thing. And here's a basic due diligence checklist. I won't go through it in detail. I think you're all familiar with it. If you'd like this, just send us an email at Exploration Insights, and we can send these things to you. Basically, competent, committed, honest management, share structure, who owns it, who's going to sell into it, the project, we talked about that, the CONSTAC, CAPEX, that sort of thing, money, G&A versus actual exploration in the ground, cost to advance, and ultimately, again, who really cares? Who are you going to sell your stock to? Always keep that in mind. All right, now we're going to get into some real-life details, some real-life companies. Evrim Resources, this is the stock that we owned in Exploration Insights, did really well on, and you can see what happened when they put out their drill results. This thing went from $1.22 to 30 cents. The drilling was they hit near surface mineralization that apparently doesn't continue at depth. So getting into this project, this is what we looked at. It was a large, high sulfidation system. It was virgin discovery, not in an area known for this type of deposit, but it had all the earmarks of a potential discovery. You know, the geology was right, basically, and it was a large enough system. Joe and I went there to site. We saw the trenching. We saw the rocks. Again, it confirmed the company's interpretation. This is some sort of high sulfidation epithermal gold system, and it looked to be oxidized, which tells us again that your OPEX and CAPEX are going to be much lower than if it was not oxidized. Basically, oxidation, if you take, is turning iron to rust. When the rust turns to rust, the gold is liberated. It's a lot easier to get out. And the trench results, nice, very nice. 193 meters at 2 grams, 156 at 9, some very high-grade stuff in there. And this is what it looked like, their initial trenching after they went there, did the surface rock sampling, they trenched it. It looked quite good. And as it moved off to the northwest, it seemed to go under cover of a post-mineral lava flow. So we could see it extending out that direction. So the size was potentially there. And this is what it looks like. The trenching you can see right down here in the corner. And the red and yellow are rock chips that came out pretty good. So again, this got the size. The pink and purple are alteration. We were looking at a grade of 1 gram or something, which if an oxidized deposit at surface is pretty darn good. And then the geophysics. This is where, geophysics is pretty much always guaranteed to give you an anomaly. That's what they do. And this gave us a great anomaly. You can see here, the blue suggested that this was a silicified body, which is what we were seeing at surface. It was not chargeable, suggesting that the oxidation was at depth. So the interpretation here is that what we're seeing at surface continued to depth. And it was only half right. It was oxidized for the most part. It was silicified, but there was bugger all gold. So that's the way it goes in exploration. And finally, what does success look like? And I'm bringing this up because this is a company we purchased back in 2015, I believe it was, at 10 cents. And we bought it because the management, the strategy, etc., it fit our criteria. But it took 3 years of churning through projects run by other companies before they actually made this project, discovered this project. We added some at 50 cents when we went and saw the trench results. We recouped quite a bit of money at $1.30, so we got all our scratch back, plus a bit of a profit, enough to buy a few cases of beer or whatever, burritos. Newmont came in at $1.50 for $7 million. They sent their team down there. They liked what they saw. And now we're sitting with a company around 30 cents, but it's got 12 million in cash and JVs and against a market cap of 27 million and a number of joint ventures ongoing. So we still own the business. We failed on that discovery, but we still own the business, and we've got a shot at another one with them all cashed up. All right, here's another one that we own in Exploration Insights, Marisol. A market cap 57 million at $1.08, 24 million in cash gives us an enterprise value of 33 million. They follow the joint venture model as well. They've got partners spending about $9 million over the next year and a half. They'll be spending $3.3 million on their own. They're drilling a couple of projects of their own in Argentina. Partners include 2 with Newcrest, 2 with Oceana, 1 with Hochschild's, and they've got on the negative a dysfunctional board, which they're working to fix. We'll see if it is or isn't. And that slide down there is one of the projects I'm going to talk about next. Up in the high Andes, high sulfidation alteration, massive system. That's what it looks like at surface. So it's called Altazor, and it's a high sulfidation gold target at elevation. And the target we're after, and these are known throughout the district, just down the road is Goldfield's discovery, which is 3.5 million ounces at about 5.2 grams. That's what we're looking for, something along those lines. So the geology's right. What we're showing here is breccia pipes, various manifestations that the geology we're seeing at surface is reflective of a potential major gold system at depth. If we look at in more detail the alteration, we're vectoring. The alteration gets hotter down this way. We're starting to get breccia pipes in this area, and it's pointing towards a hotter area down here in an area covered by post-mineral volcanics. So that's sort of where we're being directed, and Newcrest will be drilling that hopefully later this year. And geophysics, again, view with caution. But again, it's showing that the rocks beneath that appear to be have the right characteristics to host that sort of mineralization we're looking for. I always look at geophysics as, again, you're guaranteed an anomaly if you run a geophysical survey. All right, Sun Metals. This is a company that created quite a bit of excitement late last year. It's a company, we get a lot of questions from subscribers on various, news releases and such. We look into them. And this one we got a lot of questions on, so that's why I'm bringing it up now. Market cap 32 million, 6 million cash. Teck owns 13% via a charity flow-through deal. The Stardust project in BC, large multi-phase intrusive complex. 28 million bucks has been sunk on this thing since 1945. Over 400 drill holes, over 400 lines of geophysics. They've got a small inferred and indicated resource, about 3 million tons at a decent grade, not great grade. And the man kind of behind this, Peter McGaw, who is probably one of, if not the expert on these sorts of systems, CRD systems, porphyry skarns, he was there clear back in 1999 working on it and promoting, and he's here again. Again, behind this, he's the man that they send you to if you want to know how these work and what they're doing. Conceptually, this is what they're looking for. This is a slice through the earth. Here's the Earth's surface. Here's your intrusive down here. This is where they're looking in this area here. And you can see it's about 3 to 4 kilometers deep where it was originally formed. Now, since then, there's been erosion, so this project started as the erosion level is about in there. And they're finding little indications of this sort of system, mantos and such. And this is their interpretation from their website of what they're looking for. And here again, we've got, they've through all this work that's been done historically, they kind of think this is conceptually what it looks like, and here is the target down here. About 500 meters down, I think. No, that's not right, 300. Here's the drill hole that got everybody excited, 100 meters of 5% copper equivalent. The drill hole came down like this through here, and that's where it hit. I want you to notice that these light gray lines, those are previous drill holes. And we're going to look at those in detail. They've pulled out this to show us what it looks like. This is not true width. We really don't know the true width. So we're going to just take this and go to the next slide. That's that zone there. First, we're going to zoom in on this right here. And I want you to look. The red is mineralization. The hatched is skarn. All right? Right here. See that drill hole, that drill hole, that one completely missed. This one kind of cuts it off. Now, I don't know the depth of this, so we don't have all the information, but that's sort of what you can only work with what you've given on the website. So, okay, so we know that's what happens there with that drilling. Should be another, okay, there's another X right there. Again, see what's happened here is they hit the skarn in one zone, the mineralization, and just a little ways away, it doesn't line up, it's offset. So again, bingo, that's telling you this thing is structurally complex. The more tight the drilling gets, the more complex it seems to get. And down here, again, the red, the mineralization, it's gone. They didn't hit it in this hole or this hole. And this one went through it. All right. Now we're going to look down here in detail. This is where the good drill hole was. This is the end of a previous hole. Let's see if I got X there. So that's a whole historic hole. This does not continue up to there. They just, stop just short of it. I don't know why people always do that, but that's what happened. Here's the drill hole that was impressive, but we don't know what the real angle is of this mineralization, what the true width is. They could be drilling more or less down it, or they could be drilling across it. We don't have enough information to know. and then we come down here. It's open this direction, they claim, and it may be. And it's open down this direction, but we can see from this drill hole, and I'm sorry if you can't see that back there, but this is what this is what we have to work with, that it does not seem to continue down there. So what we've concluded, okay, it's a legitimate concept, good grade, skarn's complex, apparent drill holes. Skarn does not equal mineralization, true width unknown, deeper drilling required, expensive and detailed drilling to get out a resource. Basically, Joe and I's conclusion is that at 32 million with 6 million in cash, it's a decent speculation, but previous work and our knowledge of these sorts of systems told us to wait. We didn't buy it. I would not advise anyone not to buy it. There's nothing wrong with it, but this is how I'm trying to get across to you how we evaluate things at Exploration Insights. Why bother due diligence? Here's some good examples. Camino, Arizona Silver, Corex, Great Panther, Northern Andina, my favorite, Garibaldi. So we've avoided all those. All right, my time is about up. I'll be speaking again at giving a tour here. What time is that? At 3 o'clock, 3:10, and then there's a panel later on. But on our website, there's plenty of information. I invite you to come and take a look at that. If you've got questions, send them in. We try and answer them. Joe and I spend our time traveling the world looking at these things. We visited 32 sites last year. And good luck this year. I think it's going to be positive. Thank you very much.